Hi everyone and welcome back to my channel. I'm Loladay and today's video is going to be all about student finance. So what is it? How do I get paid? When do I get paid? Do I have to pay it back? Is there any interest on it? Does it ever get cancelled? And all the things you want to know about funding your university. So if you're about to start uni or you've already started and just don't really know how it works, then this video might be for you. Now, just a quick disclaimer before we start, I am not a student finance advisor, so obviously take this information as you please. I have done my research, but if there's anything missing or you don't understand anything, obviously go to the student finance website. So yeah, let's get started. So firstly, what is a student loan? So a student loan is basically a loan from the government that helps you to pay for your tuition fees and also your living expenses. So in England, this is administered by Student Finance England and the Student Loans Company, and it's split into two. So there's a tuition fee loan and then you also have a maintenance loan. So the tuition fee loan is basically paid directly to the university, so you don't see that money at all, and that is equivalent to your tuition. And then the maintenance loan is paid into your bank account, and this is for stuff like rent, your expenses, and just basically just living costs whilst you're at university. The maintenance loan is usually paid 3 times a year, so it corresponds with the start of each term, so usually in September, January and April. And the one in April is usually a little bit bigger just to help you to pay for, if you've got a year-long tenancy, then it will just help you to pay for the end. Okay, so the next thing is how much do you actually get, how much are you entitled to? So this is actually dependent on 3 factors. The first is whether you decide to stay and live at home or if you move out. And then if you move out, are you in London or are you outside of London? And then the third thing is all based on your combined household income. So this is your parents plus yours if you earn anything. And I'm going to put up a little table of all the different household incomes and how much you'd be entitled to get just here. So that will hopefully make you understand a little bit more. But just by way of example, the lowest you can get, so obviously that's if you're living at home and your combined income is greater than, I believe, 70,000, then you would be entitled to £3,410, and this is annually. And the highest would be £12,010. So the next thing is, do I have to pay it back? So the short answer for this is yes. However, you probably won't end up paying back the whole thing. As you can see and cry, I owe this much money to the Student Loans Company. However, I'll explain how the payments work in a minute. So in a nutshell, yes, you will have to pay it back subject to interest. And some people think that if you move abroad after uni, then it will just be cancelled, but this is not true. Basically what happens if you live abroad for over 3 months, you basically have to tell the Student Loans Company that you've moved, and they have different thresholds for different countries, obviously based on their cost of living. And your minimum payments will reflect the cost of living in that country. So for example, if I move to Switzerland, I will pay more because the cost of living is higher, if that makes sense. Okay, so how does the payments and that kind of thing work when you finally finish uni? Basically, you become liable to pay for your loan as soon as you start university. So as soon as your first payment hits your account, you start accruing interest, and this interest will be the current rate of inflation, so RPI plus 3%. So it's currently at 5.6%, I do believe, but obviously this just depends on what the inflation rate is like at the time that you're studying. So again, these figures are for 2020 to 21, but you only start repaying your student loans once you earn £511 a week or £2,214 for the month. And this will basically be deducted automatically by your employer through PAYE, and you'll pay 9% of the excess over the minimum threshold monthly. So like I said, if you're employed, this will come out automatically from your paycheck once you meet this minimum threshold. If you're self-employed, then you'll do it through the self-assessment system that you'll find on HMRC's website. If you live abroad, you'll pay directly to student loans company. Okay, so let's take an example. Imagine you earn £27,000 for the year. Your monthly repayments are going to be £3 a month. So obviously, if you times that by 12, you're going to get £36, and then times that by 30. Let me get my calculator. Alexa, what is 36 times 30?
36 times 30 is 1,080.
Okay, so thanks to Alexa, we know that if you earn £27,000, you're going to pay back 1,080 after 30 years. So student loan allow you to pay extra repayments if you want to. But as we've just realised from this example, if you earn £27,000, you're only going to end up paying £1,080 after 30 years. Okay, so let's use the example of the UK average salary. So it is £35,423 a year for those who are in full-time employment. So if we then use that figure to figure out how much you'll be paying monthly and how much you'll eventually end up paying, you will end up paying £23,911 over the 30 years horizon before it is cancelled out. And so I think, for me anyway, I don't think I'll be making any extra repayments because it doesn't really make sense to pay more than I have to. Obviously it's up to you. You have the opportunity if you want to make extra repayments, but for me it just doesn't make sense. So that's the end of the video, guys. Thank you so much for watching. Hopefully this was useful and it gave a bit more clarity on what student finance is and how you pay it back and how it all works here in England. And so if you enjoyed it, please give me a thumbs up. Please consider subscribing, and I'll see you in my next video, guys. Bye.